interested in perhaps refinancing your home loan. So why do people refinance their home? I've come up with 7 main reasons people decide to refinance. Number 1, reduce their home loan repayments. Number 2, the property is increasing value. Fixed rate period is expiring, or they can afford to pay more off their loan and want to reduce the term. May want to increase their loan to take some cash out for various reasons. Might want to do some renovations or consolidate some debts like consumer finance, car loans, credit cards, etc. So reducing your home loan repayments. Now that could mean a couple of different things. Obviously, most people would connect that with getting a cheaper interest rate. So number 1, want to reduce your home loan repayments. So this obviously means people are chasing a sharper interest rate, generally speaking. Now, if you've had your home loan for more than 2 years without a review, then you're more than likely paying too much. Currently, we have variable rates out in the marketplace as low as 1.99% for a home loan. They're a little bit more for investment. Based on a home loan of $500,000, the repayments would be $1,846. If you save 1% on that home loan, that's more than $3,000 just in the first year. And there's potential bonuses out there, as there are still lenders paying a cash incentive to switch if you qualify. So property has increased in value. That's very topical. Over the last 12 to 18 months since COVID, the property values have been going up consistently, which goes against anything most people would have thought was going to happen at the beginning of the COVID pandemic. So what does it mean that your property's gone up in value? Well, it means you've got available equity. It will enable people who have purchased their property using family guarantor to release their parents' property if they wanted to do that. I think most parents would be pretty keen on you doing that. You'll be entitled to a sharper interest rate. If you were originally purchased a property at a high loan to value ratio, 90 or 95%, generally that comes with higher interest rates, especially variable. So if the value now means that your loan is 80% or less, you will definitely get a much sharper interest rate. And the other reason, or the other advantage to having extra equity in your property is you may want to invest in shares, manage funds, purchase an investment property, complete renovations, or consolidate some debts. Third reason is your fixed rate may be coming to an end. Generally speaking, when fixed rates expire, they automatically roll over to a standard variable rate, which is generally very non-competitive. So if your current lender is not offering you something that you're happy with, then it's very worthwhile looking at doing a refinance that time. Number 4, I can afford to pay more off my home loan, i.e. you want to pay it off quicker. Now, you can pay as much as you like whenever you like. Even if you've got a 30-year term, you can pay it off in 10 years if you can afford to do so, but most people don't. They end up pulling back that extra payment out of their redraw because something comes up, or they spend it on holidays or whatever. If you shorten your loan term, it's actually a disciplined form of savings. So instead of going for 30 years, you might want to drop your loan term to 25, 20, or even 15 if your income allows. And it's a great forced savings method if you don't want to do anything with your equity. Number 5, I want to increase my loan, take cash out. You can do that for any worthwhile purpose, as some we've already mentioned. Want to do renovations? Now you could be just doing cosmetic or non-structural renovations that don't require a build contract or council approved plans. In that case, we can generally release the funds for you to spend at your discretion and purchase your materials and pay your tradies as you wish. Alternatively, if you're doing something that is structural and does require council approval, it does have to be done via a construction loan, and the bank will control the funding. Number 7, Now this is a very important one. Sometimes things don't go to plan and you build up a lot of extra debts, and that's happened over the last couple of years with people losing jobs and hours, etc. You've ended up with more credit card debt, personal loans, car loans, zip pay, afterpay, all those things. If you have a number of those, that can be quite punishing on your cash flow and makes life quite stressful. So we can consolidate all of those debts into one home loan and save a massive amount of cost and interest, but the cash flow improvement is what really can alleviate people's stress in their household. And I'll give 3 real life examples. So real life example number 1, and this was quite recent, just a few months ago. A client of ours had 3 properties. He wanted to refinance his home and 2 investment properties. At the same time, we consolidated a novated lease, which was owing about $20,000, and released $25,000 for some cosmetic renovations. Now, post refinance, the cash flow was improved by $2,700 a month. So that's $32,400 a year of funds available in the household that weren't prior to this refinance. That's a massive difference to their ongoing household costs. The interest savings in the first year alone was almost $7,000, and bonus, the client did receive a $3,000 cashback incentive from the new lender. So all in all, great result. So real life example number 2. Client refinanced 3 properties, similar to the previous one, home and 2 investments. The loans had been in place for quite some time due to valuations in the locations where these properties were prevented being able to refinance for a number of years. But after the fact, his cash flow improved by more than $4,000 per month. It's over $51,000 for the year. Savings of interest in the first year was $24,000, and also received a $3,000 bonus cashback. So very, very happy clients. And real life example number 3. Client refinanced their home. It was originally purchased using family guarantor, so that where part of their lending was secured against their parents' home. Thanks to the recent increases in their property value, they were able to refinance the home, release their parents' home from the equation, so it was all standalone. At the same time, we consolidated some niggly little debts. They had zip money of $1,500, a car loan of $24,000, and a credit card of $5,000. So their cash flow improved by $1,400 a month, over $17,000 a year. And their interest saving in the first year alone, based on this consolidation, was greater than $10,000. And once again, the client was fortunate to receive a $3,000 cashback from the lender. So great result. So there's 3 real life examples where people have saved real money, and nothing to be sneezed at. We're talking large amounts of interest savings, but more importantly, huge impact to their cash flow in a positive way. So if you haven't had a health check on your finances in the last 2 years, I urge you to do so.